Okay, we had a big sell-off. S&P dropped more than 1%. NASDAQ dropped 2%. Microsoft dragging the market lower. Meta going up. Microsoft going down. Real concerns about the massive amount of spending going on with Microsoft, but not seeing, real results yet. Microsoft dragged down approximately 10% as cloud growth is slowing. The company issued soft guidance going forward, and that gave us a tech sell-off. We just had the closing bell, and Microsoft ended almost 10% lower, just a fraction under 10%. After hours, it's down a little bit more. Meanwhile, we saw Meta up 10% for the session, up over 10%. So kind of interesting there. We have Apple earnings here after the closing bell. A lot of earnings next week as well. And that includes Amazon 1 week from now, next Thursday. Tomorrow, we're going to get the inflation data before the market opens as well. And tomorrow, we're going to get the December PPI wholesale inflation reading. And last one we got, it had jumped. So keep that in mind. And just real fast, we got consumer confidence earlier in the week. And again, consumer confidence continues to warn. You see it collapse like it has. It's warning of a coming recession. It's really a leading indicator, an early warning sign of that. Consumer confidence continues to be terrible. And just quickly, next week we'll get the jobs report, we'll get the private payrolls. We're going to get a lot of earnings, including Amazon next week. And then just before I bring up the Apple earnings, again, Microsoft has lost $350 billion in market cap with this plunge now after forming a double top in 2025. And with this rebound back up, we had the death cross on Microsoft and now turning off of the 200 period moving average into that declining 50 period moving average. And this could evolve into a larger head and shoulders, similar to what we have with Bitcoin, similar to what we have with the S&P 500, possibly Nvidia and the NASDAQ. So again, eventually, Microsoft is going to make its way down also towards the April low. Meta jumped higher, gapping higher above the 200. Well, we got rejection at the 200 with Microsoft. But again, it already peaked in the summer of 2025. And you have the same thing here. You have the possibility of these massive head and shoulder patterns here on Meta. If we go back and we fill the gap and we come back and take out this low, eventually we could see the head formation complete and then the right shoulder develop. Even though we rallied with Meta and sold off with Microsoft, again, both of them had previously already peaked with little miniature double top patterns. Both getting a lower high. Microsoft got a lower high, Meta got a lower high. Very similar to what MicroStrategy did when it peaked. Got Apple earnings in, and Apple earnings show that Apple sales have surged 16% on iPhone demand. Apple beats on earnings and revenue. iPhone revenue sharply increasing. With that, Apple is up 2% after hours. Now, so far, the after hours rally of 2% is not taking Apple to new highs. Again, had a peak back over here in 2025 like Microsoft and Meta. And again, you've got that same possible head and shoulders pattern here if we end up dropping. If we end up continuing to drop towards these April lows, you have the possibility of a head formation. Even if we rally back up, you've got the 50 period here in the daily time frame. You could rally back up and still eventually make your way back towards the April low. Possible head and shoulders longer term, setting up here with that peak in late 2024 here for the left shoulder for Apple. And again, before NASDAQ and S&P peaked in February, Apple had already peaked, and you could have something very similar to that here, just as Nvidia has already peaked at the major channel of resistance. So Apple in the daily time frame here. If we confirm the hanging man candlesticks that we got today and we sell off, say with maybe with the inflation data tomorrow, we push below this low, we confirm this candlestick in the next day or two, either Friday or Monday, you got to get a reversal of conditions, flipping the bars to red, flipping the cloud to red for momentum, and then you got to get red bars with the awesome oscillator. Again, we moved to a new high here yesterday on the 28th with the Fed day hitting 7,000 and retreating. You had the diversions previously over here. You had the diversions here again. I talked about that possibility if the S&P were to exceed the January 12th high, and now you have this multiple point divergence here in the most recent price action. You've got multiple points of divergence going further back on the MACD and the RSI in the daily time frame, and then again a divergence here with the MACD turning back up. If it rolls over, if we see our stochastic roll over tomorrow, we get a red bar on the awesome oscillator tomorrow or on Monday, you could confirm this candlestick. You could get a reversal of conditions and have this divergence mark the Fed day as a peak, back testing the trend line, turning off the trend line, connecting the October high with the January high, which we've slammed right into it. So again, I'll be watching. Do we get that red awesome oscillator bar tomorrow or Monday? S&P 500 daily chart here. Same thing for the NASDAQ, only getting a lower high below this level. You still have a divergence. You still have a divergence on the MACD. You have a divergence here from these highs right here, pointing up to this level right here on the awesome oscillator. In the more recent price action, you had a divergence that gave us this pullback. We pushed higher, and now you're getting the green bars, just like on the S&P. So do we get a red bar tomorrow? Do we start ticking down and seeing these stochastics roll over either Friday or Monday? If we have a hanging man candlestick, it's got to get confirmed with the close below it here. And again, if we take out that 50 period, you'll be confirming, take out the lower boundary of the bar. You'll be getting a reversal of conditions. We've been getting back and forth, back and forth. You had a 9% drop over here, nearly 9%, and then we've just gone sideways. So do we confirm a lower high, much like what we did in 2022, early 2022? NASDAQ couldn't make a new high. Potential larger triple divergence here, though, on the awesome oscillator. Multiple point divergences on the MACD, on the S&P, MACD, and the RSI. And I spoke and said the multiple divergences on the NASDAQ. I misspoke. Again, we have not moved to a new high. The S&P has the stochastic rolling over to start the week out. So does the Russell. But we need a close in the weekly time frame below the 10-week moving average. Do we see that by Friday? And let me just say this. We're going to have a government shutdown. We're likely going to see Bitcoin get the next leg down with that as it did the first leg down. That wasn't the only catalyst, but again, historically, that's what it does. The stock market will likely join Bitcoin, getting the first leg down after going sideways, as I've talked so much about. You've got this divergence now on the S&P 500. You got a divergence on the MACD, even though we have not been able to cross above the signal line. It's a sign of weakness, and our stochastic is rolling over, forming its own divergence there. So you've got a boatload of divergences everywhere. Be watching. Do we close below the 10-week moving average this week or next week? Buy a little more time and go ahead up and hit the upper channel line in the weekly time frame. You got these divergences on the Dow, on the S&P, on the Russell here in the weekly time frame. Look at the divergence here. And again, as I've talked about, very similar to the divergence in 2025 before the 21% drop, very similar to the divergence here in 2022. I think you're going to see the same thing happen here, and you're going to get this drop either towards these trend lines or towards the 200-week and towards the April low. Maybe that channel line in the weekly time frame going all the way back to the channel from 2020, as I've shown you. This trend line just goes back to the 2022 low, but I think you're going to form this head and shoulders pattern. You've got these divergences. Now our stochastics rolling over with the diversions. Here it is in the daily time frame. Again, multiple point divergences. I think you're going to see this drop. Something is going to happen. You're going to see a crash of 20% or more. If we get something like I have marked here, being back most of this, you can drop, 24, 25, 26, 27%, bigger than the 21% we dropped over here. You give the whole thing back, you drop 30%. I think Bitcoin will move to a new low. I think the S&P will come down and get a higher low somewhere and then get a right shoulder once the Fed panics. The divergences are going to play out. And again, we very well could have peaked yesterday at these trend lines of resistance. And when we see this begin to play out, you're going to get a very quick drop, very, very rapid drop like what we had over here. And even it accelerated right here. Within a few days, you had a significant drop into that April low surrounding Trump's tariffs. Now, with the linear scaling, NASDAQ has moved above the trend line. With the log scaling, we're back testing it right there with the log scaling here in the daily time frame. Previously, we had the multiple point divergences back with the October peak. Now we have divergences in the more recent price action, but we still have not moved above that level. You still may end up doing it if the S&P can try to reach the upper channel line. Possible hanging man candlestick today on the NASDAQ. We turned off of the upper Bollinger Band on the NASDAQ with a black candlestick, now possibly followed by a hanging man candlestick or either a bottoming tail. Black candlesticks often mark turning points, but not always, as you can see with this black candlestick. Sometimes they do, sometimes they don't. S&P was just below the upper Bollinger Band. So watch today's candlestick. Will it be confirmed as a reversal candlestick, or is it a bottoming tail that carries us to the upper channel line in the weekly time frame, and we buy a little bit more time? The Dow up by 55, almost 56 points today, pretty much flat, up about just over 0.1%. The S&P had dropped over 1%. It recovered, and it only ended down 9 points, possibly forming a reversal bar. But NASDAQ still took a big hit, down 0.72%. It was down. NASDAQ was down over 2% at the lows. NASDAQ had dropped 172 points. Russell was up 1 point, pretty much flat. And the VIX had surged, but then retreated. It still ended up 3.25% higher. But the S&P rebounded, either a bottoming tail or a hanging man or doji type of a candlestick. VIX got a topping tail or an inverted hammer type doji looking candlestick. Again, Microsoft dragging the market down, but then a rebound towards the latter half of the session. Here's the S&P. It got a hanging man looking type of a candlestick. It sold off, dropped below the 10 and 20, dropped below the momentum cloud, dropped back to the 50, but then it recovered at the end of the session. But we still have this divergence right here. Still at resistance levels. I'll show you that in a moment. But keep this candle in mind as we look at the VIX. You got a similar looking candlestick here on the NASDAQ. There's a bottoming tail that takes us up, challenge the high, and on the S&P, same thing, or a hanging man. S&P, they're a hanging man style kind of candlestick, or we go up and we hit that upper channel in the weekly time frame. Keeping the candlestick here in your mind, look at the VIX, because it got an inverted hammer. As we got a hammer on the S&P, we got an inverted hammer, which is a bullish reversal pattern on the VIX. Now the VIX, we had jumped above that 200 period moving average, a black line there. We pull back, we fill the gap. S&P went and filled the gap. S&P moved to new highs. The VIX did not move to a new low. We jumped above the 50 period today, and then we turned back down. We closed just slightly above that 50 period, getting above our 200, but then turning down and then closing right at the 50 period while being well above it. We had a huge surge in volatility, close to 20% higher, but then we only ended up 3+% higher. The MACD is right at the center line. It had turned up at the highs of the session sharply. It still turned up here today, but it was pointing up. The MACD was pointing up higher at the highs of the session for the VIX, near the lows of the session for the S&P. We've got the stochastic recycling back up here. So again, you got to get back above the 50. Well, we did. We closed just right above it, just by a little bit here. Now you got to get above this high today and above our 200 period moving average and remain above the 50 period moving average. That's what needs to happen for the volatility to return on the VIX, surging higher for the S&P to have volatility. The VIX relative to the S&P is diverging. It's getting a lower high. The S&P made a higher high. It is diverging. It's often associated with tops. Now, I talked about these levels of resistance on the S&P. Above this level, you have that upper channel line in the weekly time frame. Still possible we reach that, but as I said yesterday, it's very possible that we peaked the Fed day yesterday, and we're turning off of these trend lines that I talked about yesterday. Again, the April low, you're back testing this trend line right here with our linear scaling, and you hit it, turned down off of it, and formed this divergence in the most recent price action, the larger multiple point divergence. Then we hit the trend line right here from the October peak connected to the January 12th peak, slamming right up into that. We hit that yesterday with the Fed. We flirted with 7,000 for a very short period of time during the session and then retreated off of 7,000. Psychological level of resistance. But I pointed out that this continues to look very similar to this, and it looks very similar to what we had in 2022. Now we either have a bottoming tail or a potential hanging man candlestick on the S&P 500. You've got the multiple point divergences going on here. And again, on the MACD, one of the most recent price action, the same thing with the awesome oscillator. Stochastic actually rolled over at the lows, or, during the session, actually not at the lows, but we were selling off, remained bearish as we hit those lows, but then it prevented from getting the rollover on the stochastic and completing a divergence in the most recent price action. With the rebound back up just above our 50 period moving average. Possible hanging man candlestick today on both the S&P and the NASDAQ. They are still diverging. NASDAQ has still not moved to a new high. An important couple of trend lines right here. If we can clear this level directly overhead, you have the upper channel line. Again, this goes all the way back to 2020. Here I have it in the daily time frame. I want to show you this on the daily chart. I show you the channel in the weekly time frame. But again, over here, you went up, you hit the channel a second time, the upper boundary of the channel. Do we do that again, or is that all she wrote? And I'm bringing this up in the daily time frame because I want you to see the trend line. Now, again, remember the trend line I showed you on the other chart from the October high to the January high. We're slamming into that yesterday. That's just below the red upper channel line. So I wanted to show you that. I don't have that drawn in here. I just have the upper boundary of the rising wedge in that more recent price action. But here, going back to the April low, we broke this trend line. We bounced off of it, bounced off of it, bounced off of it, tried to bounce here, but then we broke it ever so slightly there, gapped down, now back testing it, and then we peaked, reaching 7,000 on the Fed day yesterday, sold off today. Now you get a possible hanging man candlestick or bottoming tail that might take us to that upper channel line, the red trend line up there. If I bring it up close, again, you can see we back tested the trend line right here. We hit the trend line right here from these highs. October, January, we turned off of that level. If this is a hanging man, it needs to be confirmed. We need to drop below the low. Now, if we see inflation jump up or there's some other catalyst, then maybe that gets confirmed immediately. If it is a hanging man candlestick, again, candlesticks have to be confirmed to mean anything. If we are to go higher above the backtesting trend line, above the trend line from the October and January peaks connected to our recent high from this week, late January, then you can go up and try to still hit that trend line. Again, I've talked about this double top in that we are forming exactly what we formed in 2025 and 2022. And again, the first peak here, the second peak here, And when we had it in 2022, we only went just over 1.5% above the previous high. Well, right now we've only gone just over 1% above the October high. And I've marked here, if we go up to that trend line, and hang on, let me move that because I had it marked for the weekly. This is the daily. If we continue to go higher and try to go up to that trend line again, you're going to be going, again, just over 1.5% higher. If that is the case, moving just above 1.75% higher, right around 1.83%, if we don't turn off of this broken trend line from the April low. We have a possible reversal bar or continuation if it's a bottoming tail. So far, we've only moved right around 1.20% above the October high. Back in 2022, you moved just about 1.5% above it. Whether we do that now or not, we'll see, because you are stalling at this trend line of resistance and you are stalling at this trend line of resistance at the moment. If we do go higher, this area directly overhead above 7,000 is then major resistance. We hit it back in October, just slightly overthrowing that trend line, the parallel channel. If we go higher, you have major resistance directly overhead just above 7,000. If we've tagged 7,000 and we turn off of that psychological level of resistance, then again, we'll need to see formation of that by signals turning bearish and then breaking down below this low right here, possibly confirming a hanging man candlestick. So do we turn off of this trend line with yesterday's high on the S&P 500? If we clear this trend line, you have this other trend line of resistance directly overhead. Also, you have at the levels where we're at right now, you have the S&P slamming up into the long-term channel, going back 100 years, going back into the 1920s. This channel will likely give the S&P a top, which we could have peaked yesterday with the back test of the trend line from the April low if signals revert back to bearish and we don't reach that upper channel line in the weekly time frame. We have these major negative divergences that have formed in the daily and the weekly time frame. Either they're going to play out here, back testing this trend line and hitting this upper trend line from the October peak to the January peak, very similar to what we did over here. Either you're going to turn right here or you're going to go up and you're going to hit that upper channel line a little bit higher in the weekly time frame and then see those divergences play out. But right now, we are retreating off of the 7,000 area, turning down, but then recovering, getting a possible hanging man candlestick or a bottoming tail, one or the other. So we'll see how the market does with the PPI wholesale inflation data. We'll also be watching yields if they continue to rise or do they start pulling back a little bit. Yields tend to have a negative correlation with the market. We'll be watching the market's response to Apple's earnings. Right now, as I'm making the video, Apple is up 2%. Now it's up 0.44%, so it's given back some of the gains. We'll be watching to see how Apple performs by tomorrow's close and overnight, how futures do, and then what becomes of this possible hanging man or bottoming tail. If the rally fails, the 10 period will drop back below the 20 period, will drop back below both of those moving averages. The 10 is about 2 points above the 20 period moving average, and we rallied holding off of the above the 50 period moving average here. So again, these divergences are either complete or about to complete here in the daily time frame. S&P tried to rally initially, got a topping tail, got a lower high, and then we retreated, and again, moving further away from that 7,000 area, got the rebound and recovered the last half of the trading session back up to the 200 here in the 5-minute time frame. We're still seeing the 50 below the 200, but getting back and closing above that 200 period, covering most of the gains and just having a small decline after a pretty sharp drop. We have formed that rising wedge getting above 7,000, briefly being above 7,000, and then again, just not there very long, retreating, forming the divergences on some of these intraday charts. Here we hit an extreme down here, today's low, and then recovering back up. 50 is dropping here in the 5-minute or 15-minute time frame. We're stalling at the cloud, at least so far, and dropped below the 200, got back above it. So do we get another lower high, or try to go back and test the 7,000 area and hit the upper channel line in the weekly time frame? We have a similar looking chart on the 30-minute chart. If we turn back down, again, you might go lower to form some divergences here. We didn't have a divergence. We don't have to get one, but if we establish another lower high. Again, we tried to rally. We got the lower high. And then now we've rallied up, and we're so far getting another lower high. We'll see what happens tomorrow. 60-minute chart, again, we went higher above 7,000. You had the rising wedge breaking down, the throwback, and we have the multiple point divergence on the RSI and the MACD. Is it done? Or do we go up and hit that, do we go up and hit that upper boundary of the channel line? Or does the back test from the April low hold and our trend line from our October high, connected to the January high, which we've slammed into the Fed day? Again, possible bottoming tail or hanging man candlestick on the NASDAQ. Again, if we turn it down, got to take out these lows, got to take out the 50-period moving average, you got to take out the 10 and 20-period moving average. Again, they're very close to one another. If we do sell off, they could get across. They tried to do it at the lows of the session, but couldn't close there. The 10 is just still above the 20 period, the 10 the red line, the 20 the blue. The negative divergence, we still have the NASDAQ having a lower high than the October peak. We can't move to a new high. You have the exact same situation that you had in 2022 where the S&P moved to a new high and NASDAQ did not. Even if NASDAQ does make a new high, you still have a double top pattern on both. The stochastics roll over during the session, but recovered off the lows. Even though we recovered off the lows, we still were down 0.53% on NASDAQ 100, down 138.5 points, but it prevented the crossover on the stochastic, bouncing off of these 50-period moving averages and the momentum cloud for both S&P and NASDAQ. Again, I want to continue to point out we have gone nowhere. We've gone sideways for months, and we've been in this trading range since September. If the reversal's to play out, you need to come back, you need to break this trend line, take out the January low right here, take out the December 17th low. The double top is to play out with the lower high. You've got to take out the November low. That's the confirmation line. Same thing with NASDAQ again, NASDAQ 100. You got the multiple point divergences. We have the bounce here up the cloud in the 60-minute time frame, the 200 period, and then the rebound back up. We were down over 2% at the lows of the session. We only ended down 0.53%. So NASDAQ and back to S&P, they both bounced surrounding the cloud and the 200 period moving average and going down towards momentum cloud in the daily time frame and their 50 period moving averages.